Hello everyone. I'm going to explain a trading strategy on Renko chart in TradePoint. Now this is going to be a very interesting discussion because today we are discussing an indicator which is developed on a particular charting method using the important properties or important features of that charting method. See, what I believe in is every charting method has some important properties which are very unique. If we can take advantage of those unique properties, for example, from trading perspective, if I have something unique on a particular method, I must think as a trader, can I use that property and plan something from trading perspective? If yes, I must explore. So that's the thought process. And from that perspective, I've designed something on the Renko chart. So I call it D Smart. Basically, it is a combination of different indicators on Renko chart. So it is, of course, by Definedge. Even though I've spent a lot of time on this concept, it is the hard work of technical team, development team, and because of their support and the framework that they have built, we are in a position to work on things like this and make it available to everyone. So we are using Donchian channel, disparity index, super trend, moving average. These are the indicators which we are using in this concept. Brick zone is also an indicator developed on Renko chart. I'll soon talk about that. So though these are very popular indicators, but if you want to know about detail, I've explained them in very simple words. Many indicators like super trend, ADX, RSI, Donchian channel. So all these you will find on blog section in Definedge. So now let me explain what is it. See, even if you don't know much about Renko chart, so Renko chart divides price into fixed size boxes. So for example, if this is a 15-point move, I can divide that in 3 boxes of 5 points each. So every box is of equal size and we divide the same price in fixed size boxes diagonally plotted. So this is one of the important properties of Renko chart. There are fixed size boxes and diagonally plotted. So for example, if I plot a moving average on this candle, I will get one price, right? But same moving average, if I plot on Renko chart, here I will get 3 prices and maybe they will be moving upward. So just to keep it simple and explain in simple words, here I will, if for example, moving average is my stop loss, here there will be one level for me, one stop loss level. Here in this case, I will get new stop loss level on every brick. Yeah, same way for the downside price movement. So I hope that is clear. So this gives a perspective that maybe we can design a strategy on the Renko chart for trailing the stop loss, so that if I get a good move, my stop loss will get trailed. If price is in sideways or there is a consolidation, my stop loss might remain flat. So that's the basic idea. Another important advantage of Renko chart is, of course, that they belong to a noiseless family. So noise of the data can be removed by defining the size of the brick. To understand more about super trend, you can read the blog or view my video on that. But super trend is a very good indicator which takes into account volatility and a strong trend. You have to define two things to plot super trend: period and multiplier. So for example, if we plot it on a candlestick chart using 10 period and 3 multiplier, which are popular parameters, so it will be plotted over 10 bars and the multiplier will decide how far your stop loss will be. Now it uses ATR, whether price is in uptrend, downtrend, or how far the stop loss should be. So ATR is average true range. So in a candlestick, a true range is highest of difference between high minus low, high minus previous close, or low minus previous close. So this A, B, and C, the highest would be the true range. So it is just not the simple candle range. It also considers previous closing price to decide the true range. And the average parameter of, let's say, over last 10 period will be a 10 bar ATR. So this is how ATR is calculated. Now same super trend when I apply on Renko chart, there is a key difference. What happens is, here we don't have ATR as such because we don't have shadows. So high price here is, if the break is bullish, if price is going up, the closing price becomes high price. And same way, when a break is bearish, the low price becomes closing price. Right? So we have only high price and low price here. Now what happens is, if I calculate the ATR here, it will be a difference between high minus low, which is actually a break size, and the difference between high minus previous close or low minus previous close. So in Renko chart, the high minus low is range of current break. High minus previous close, in case of bullish breaks, it is high minus low only actually, isn't it? So in bearish breaks also it will be high minus low, because the low is always a closing price of previous break in case of bullish breaks. And the low minus previous close is actually same, so it will always be zero. So here in this case, the highest period will always be a range of the break, the size of the break, correct? And if the break changes the color, in that case it will be twice of the size of the break. So just to put it in simple words, ATR in Renko charts will always be a one break or two breaks at the max. If that is the case, there will not be any difference even if I plot 5-day, 10-day, 20-day ATR on the Renko chart. More or less, the value will be same. So see this. This is 50 period ATR. The ATR value of 14 period will be between 50 to 60. So just because this is a 50 point Nifty Renko chart, the 50 absolute points, right? So the ATR will remain between 50 and 60. So here actually parameter will not matter. Even if I make it 70, it will be almost between 50 to 60. I mean any parameter for that matter, right? So now I can plot super trend here even without defining the parameter. That is one. Now by defining the multiplier, what happens is we give multiplier to the indicator. For example, my stop loss should be how much far from the range. So normally on the candlestick chart, the default parameter is 3 period. Here we can do it using 10 period, 10 multiplier, 15, 20 multiplier as such. But thought came in my mind, can we ask market to decide that parameter? How far the stop loss should be? Okay, if we ask market to decide that, on what basis should it be done? It should be like, if it is a trending market, the stop loss should be trailed and it should be affordable. It should be comparatively less. And if it is a wide range market or there's a consolidation or a volatility, then stop loss should be far, right? Now, how will we decide whether market is in range or there's a consolidation or things like that? So I have created an indicator called brick zone. I've explained it in my book also on Renko chart. So the brick zone calculates number of bricks over last, let's say 40 period. How many bullish bricks and bearish bricks are there in the price trend. So for example, here number of bullish bricks are more than the bearish bricks over last 40 bricks, then this brick zone will be bullish, which is black in color here. And if bearish bricks are more, it will turn bearish. It will turn red. So in nutshell, this tells me how many bricks are bullish and bearish. So what if on that basis we define the multiplier of super trend? So that is exactly what we are doing in DSmart. So this is the green line that you see on the Renko chart. It is a super trend in a way which does not need any parameter because it is on a Renko chart. The multiplier of it is decided on the brick zone, and there if market is in sideways mode, when number of bricks, bullish and bearish bricks, so when number of bullish bricks are more than bearish bricks, that means the trend is up and strong. If number of bearish bricks are more than bullish bricks, trend is down and strong. In those cases, the stop loss will be more affordable. Otherwise, the stop loss will be kind of quite far. The multiplier will be high, and so we don't get more whipsaws in a way, and we get to know about the kind of market phase. So this line, when price is below this green line, it is bearish. When price is above the green line, it is bullish. Now, the second thing is, I like a Donchian channel also on Renko chart. It is kind of very helpful indicator. It tells you if price goes above, let's say last 40 period, 40 bricks, and if it goes above that, it is bullish. If price is below 40 brick low, it's bearish. So this is a Donchian channel on the same charts. This green line is D smart line. This light green line is upper band of Donchian channel, and the red line is lower band of Donchian channel. So now here, when the price goes above upper band, it is bullish. That means price is going above the high of last 40 breaks. And same way, when it falls below the low of last 40 breaks, this lower band will fall. Same way here, upper band is rising. So what I've done here is, instead of plotting Donchian channel also on same, we can just put arrows below the break when the upper band is rising, or above the break when the lower band is falling. So now I don't need Donchian channel. I can simply look at it in the same chart, right? So now this means that price is below smart line, it is falling, it is bearish, and it is also below last 40 break low. So Donchian band, lower band is falling here in this case. Here in this case, Donchian upper band is rising. So we can get to know it in the same indicator. So now third thing, this becomes a trend following indicator in a way. We get to know about the market phase. We get to know about trend. We can ride the trend using these things. But what happens at times is, I like the concept of disparity. Now, disparity is how far the price is from average line. Moving average normally is used for disparity index indicator. How far the price is from that average line. If price is very far from the average line, then it can revert to the mean. It is not necessary, but it might reverse. So what we do here is, if price exceeds the range between the smart line and the price line beyond a certain historical percentage, then there will be a star which we will put below the bearish brick in case of downtrend, and above the bullish brick in case of uptrend. So if price is falling and the difference is widening, then there will be a star. It is just an indicator that difference between price and the smart line is rising. Same way in the uptrend. So, and this star will appear when there is a brick reversal. So here you get to know that there is the price has reversed after a significant gap between price and average line. So that's a disparity star. So I'm using these concepts and plotting it on a chart, on a single indicator. So if you go to add study and D smart line, now you can keep these as default, or you can play around, but we are giving multiplier and non-trend multiplier. When there's a trending market, the multiplier is usually high. Non-trending market, multiplier is usually low. I've given this option also to user, but you can keep all this default and plot this. This is a smart line, and now I guess you know how it is plotted. If you'll see the information here, this will be a level of the line. The D smart level will be the price level where the indicator is plotted. It also shows the difference in percentage between the indicator and price, and difference in absolute terms. So you always know how far your line is from the current price level. Now, how can we use this from trading perspective? So this also tells you the market phase. For example, this is bearish, this is bullish, and when the line is flat, it is kind of horizontal market. So one strategy could be buy when price goes above this line, and short when it falls below the line. you always know how far your stop loss is. Typically, the nature of the indicator is such your initial stop loss will be very far when there is a reversal, because your market at that point of time is kind of neutral. But when the trend accelerates, your stop loss will become affordable. So that is what you will always find with this indicator. And typically, what happens is if market doesn't accelerate after your after the reversal, if the indicator doesn't accelerate after the reversal, that means the immediate reversal is not strong and you should wait for confirmation. So we can trade this simple line. You know the concept now. We can add or pyramid when there is a bullish signal and the blue arrows appear, because then price is moving above the downtrend channel. That could be a good strategy to pyramid or to add to the winners if you can do that. These stars are just the indication. If you are doing it in derivatives, maybe you can write calls or write puts when you are short. This is on Nifty futures chart. These vertical lines are day separating lines. I plotted it on 0.1%. You can do it on 0.1% or 0.05%. This is 0.05%. So you will always see, for example, when there is a trending day, you will see this line continuously accelerating throughout the day. And when there is a horizontal day, you'll find it like this. So this was one first trend, and then this was the second trend. So these are the trades. You know the reversal level, stop loss. You can decide the rule, how what kind of stop loss you will afford, and you can use this stars and confirmation in case you want to book partial profit or decide on buying, writing calls or puts. So the idea is, you know the concept of the indicator, and we are trying to make it as objective as possible and as simple as possible from trading perspective. You can experiment with different brick values. Now if I ask you, now see this. If I ask you, what does it mean when you get this star signal without arrow? Think of it. No arrow means the price is not above the upper band. And when you get a star, that means difference between price and indicator is high. There is disparity and price is not trending as such. So in that case, it can become a significant reversal area, especially when there is a consolidation. When there is a consolidation going on in the market, or the market faces sideways, or when it is trading in a range. And now you can club this with different strategies. You can also look at Renko patterns if you know about them. When the reversals come or when there is a trend, you can trade Renko patterns in the direction of the indicator, and you can use this. For example, this is a zigzag pattern near star, or this is a bearish week breakout at the bearish star. But that's about making it subjective. Uh, just couple of things. Maybe you can use this swing breakout, this swing levels along with it, or the anchor lines, which could be very important indicator for support and resistance. Just to club, or maybe some intraday pivot camera levels or other things. If you want confirmation for the reversal or booking the profits. And but otherwise, for the trend following, I guess this can be a very logical, sensible, and useful tool. So apart from the objective ways to read it, there could be many other ways. For example, when price comes near the smart line, that could be an opportunity for the affordable entry, a kind of pullback trade. An interesting thing is, if you apply moving average, same period moving average on the chart, see this light green line is a moving average line. You will see the indicator moving very close to moving average line during strong trends, and when the trends are not that strong, it will move far from the price and avoid the whipsaws that might occur in the aggressive indicator like moving average. So it will efficiently trail the stop loss during strong trends, and this, and it will move away from the price when the trend is not strong to avoid the whipsaw. The smart line indicator is very close to super trend, but there are some variations. Is this the best indicator? So no indicator is best as such. You should know about the concepts, experiment, play around it. If you think if it makes sense to you, practice it and gain conviction. All that I can say is there's a lot of thought process behind building this, and I am sure it can be a very helpful from practical trading perspective. If you're using any other indicator on Renko chart or other strategies, maybe you can think of clubbing it, or maybe this can complement it. And this is applicable on all time frames, all instruments using same parameters. So the concept is really interesting. Imagine, I mean, we have used important property of one charting method. We have used different indicators, and we are plotting super trend using the parameters of brick zone, which defines the market phase. And we are also using Donchian and disparity. So I hope you find it interesting. Do explore it and let us know about your feedback and suggestions at info@definedge.com. Thank you for your time.